Hey, listeners, before you listen to this latest audio from Kevin Clark and Matt Hogue, I just want to let you know that we shot this before some major events in the world had happened, specifically what's going on in the Middle East. We do feel that despite what's going on over here, a lot of the discussion that we had still holds true. But we just want to let you know that we did shoot that before some bigger events on the world stages happened and wanted you to be aware. So, listen on.
Hey everybody, this is Matt Hogue with West Michigan Advisors, and I'm sitting here with our managing partner, Kevin Clark, who I will freely admit is the man that has taught me everything, and I ask a ton of questions too. So today, Kevin and I were talking, and I want to ask him a good question, and that's where do we feel the markets are going to go here over the next few months, year? I mean, we've had a pretty interesting run. I mean, the markets did better at the beginning of the year than a lot of people expected, and now we're seeing a little bit more volatility. And the question is soft landing, hard landing, recession? I want your input. You've seen so much in the market, and I think your input is invaluable for our clients and for anybody that's listening to what we have to say.
Yeah, I think your question kind of adequately reflects where most people are at. I mean, what's going on in the markets? Where are we going to go? There's a lot of chaos, it seems like, all around us. And so, you try to boil it down to what do we know right now? And we know that a year and a half ago, the Federal Reserve started to raise interest rates. We were at zero for a long time. And we know, I believe, we're in the eighth or ninth inning of a Fed rate tightening cycle, not the first or second inning. So we know we're getting near the end of interest rates going up. Recently, we've seen long-term interest rates rise, which has been a surprise to most people, which long-term interest rates tend to be reflecting more inflation expectations. So it's not really surprising that long rates would go higher. So the question is how high, and that's yet to be seen. But ultimately then those interest rates are driving what's going on in the stock market. And I think you've talked about earlier this year even that we were going to see more volatility. And that's exactly what we've seen. I suspect the volatility isn't over. I suspect that we will see some more volatility in the fourth quarter. We're going to certainly see some volatility in the first quarter. And I think until the question on whether or not the U.S. is going to go into a recession is answered, we're not going to know how long that volatility is going to continue. But what we do know is that we're in the later innings of a Fed tightening cycle. That typically bodes well for stocks over the next 3-5 years. But as for the short term, prediction on where we're going, I don't know. But, I know the generalities. We're near the end of a Fed tightening cycle. That usually is a good time for investors.
Right. That's good to hear. I think the concerns are obviously going to be with our clients and anybody that's in the market right now is, okay, we're dealing with this volatility. What conversation should I be having with my financial professional to make sure that I feel comfortable, right, as we go through this? And what should I be looking for from them as a financial advisor, in your opinion?
Sure. Well, I think it starts with having a plan.
Absolutely.
You have a financial plan. That kind of is the North Star of where you're going. And so I think what you can do with clients in times like these is go back, look at the plan. Are you still on track? Has anything materially changed in their lives that would cause you to reposition assets? And I think it starts there. The second thing that comes to mind right now is we still think you should be playing some defense. I mean, with all the volatility, with the uncertainty on when is the Fed going to stop raising interest rates, playing a little defense here, I'd rather give up a little bit of upside and keep my money safer. That's just, I think that the kind of market we're in, we may be in this for another 3 to 6 months, maybe longer. And so playing defense rather than being very, very aggressive, I think is the right stance. But it starts with having a plan, working the plan. I suspect most people still are probably in pretty good shape when it comes to their financial plan. It typically surprises people that when you get the kind of volatility we've seen, people tend to think, I'm not going to have enough money for retirement. I'm not going to be able to take the trip. I'm not going to be able to send my kids to school, whatever it may be. But when you really dig into the numbers, you look at the data, you look at the plan, and most people are probably in pretty good shape.
I agree. I've done a lot of goal plans, and regardless of your age, I'm going to tell you if you're 20 or 200, having a goal plan and make sure that you know exactly what that money is going to be used for is helpful for you. And I think it's also helpful for your financial advisor to make sure that the assets that they put into that goal are going to help you achieve your goals. Because it's one thing to manage assets, it's another thing to make sure we manage our expectations and the goal that we have. I'm a firm believer in that, and I think making sure that you have goals set firmly with your financial advisor, what you want to use that money for, and the timeline to use is going to be very helpful. Kevin, anything else you want to add?
No, I think this is just a time to be planning for where do you want to position assets maybe in the next 3 to 6 months. We are strong believers in dollar cost averaging into a market. As we've seen interest rates rise here, long-term bonds. We haven't talked about owning bonds for probably 10 years. But this may be a time for people closer to retirement to be looking at some bonds. So start planning on that. Start thinking about it. Maybe even dollar cost average some money into a position that you've been thinking about.
I think that's great advice. Listeners, if you guys do have questions, feel free to reach out to us. We'd be glad to help you out. Our email and our phone number is going to be in the show notes down there. We're always glad to just give good advice and help people make smart choices for their life. Be that retirement, be it a short-term investment, whatever that might be. We're here to help you out and answer any questions and help you make the right choices. Kevin, thanks again for your insight.
Thanks,
your
Matt, for having
decades
me.
of help and knowledge is, I think, helpful for everybody, and we're very grateful for that. So look forward to more of these. We're going to be talking to different advisors within our office and getting their expert opinion, and we look forward to meeting you in our office soon.